What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And if you're new to the show, welcome to the Gumbo Nation. We've been providing education and options for 11 plus years on what is or will be your largest investment and most valuable asset, your home. If you want to join the show, shoot me an email, info@mortgagegumbo.com, or the home away from the show is mortgagegumbo.com, or just Google Mortgage Gumbo. Got all kinds of ways to get your information, the iHeartRadio app, you name it, there's ways out there to get it. On the show today, why FHA loans make sense right now. We're going to break that down for you. 2026. It's now August. And way back in January, way back then, 7 months ago, your goal was to buy a home. So where do you stand? And then also, thou shalt not. We're going to discuss the number one commandment when buying a home. Because a lot of you, and I understand, but we're breaking it. So we're going to get into that. The number one, thou shalt not, when buying a home. I'm going to go over that number one commandment. But I want to start with just saying, hey, thank you, Gumbo Nation. Another great month, solid month in the books for July. Look back, July is always a solid month for us. I think people are making those summer moves, rightfully so. They're committed, right? Getting in before school starts. So another incredible month. We did purchases, refinances, got some construction loans going. Refinance first and second mortgages. Second mortgages are big right now. And we're doing a bunch of them. I get that you've got that 3.5%, 4% rate. Let's have a peek. Let's see. Let's not let you live in credit card debt or high interest rate world when you're sitting on a ton of equity. And, of course, also reverse mortgages. Trying to get one of the big shots with reverse mortgage on in the next couple weeks. If not, scheduling, stuff like that. I know what I'm talking about. I do quite a bit of them, but we're gonna discuss this because we talked about it last week. The applications are picking up. If someone you know is sitting on a ton of equity of reverse mortgage age, which is 62 or older. We talked last week about sitting on over $14 trillion in equity of the baby boomers. The number one buyers of baby boomers have a reverse purchase going right now. People always like, I had no idea. Yeah. Yep. Got somebody right now literally buying a $450,000 house, and it's going to come in with about $160,000. That's it. No note, no nothing. So we'll be able to talk about that. So reverse mortgages, make it a play because that's where a lot of the equity is. Not to mention the lines of credit. Closed on one this week, 7%. Yeah, your money's sitting as a line of credit, making 7%. All right, the Fed spoke this week. Kevin Warsh. Interest rates did not raise them, which is a good thing. They had 9 people agree to keep it, 3 dissenters saying they think they should raise rates. He kept them where they needed to be. And why? Well, we got the PC numbers, we got the numbers, and inflation month over month is sort of in a good spot. It's a little high year over year, but not where they think. And that's all with the war going on. So we have a Fed president who is not going to where the ball was thrown. He's going to where the ball is being hit. So he's not letting the past determine the future. He's trying to make decisions based on facts and data, not what ifs, not possibilities. So we'll see how that lasts. Now, look, we've got so many different factors battling us right now. And you go back to March where we sat here and we were in the getting rates down in the fives and everything was amazing and all that fun stuff. And now we're sitting here and all of a sudden we're dealing with, the highest rates almost in a year. And if the margins weren't in check, it'd be higher than it was last year at this time. Because now you've got things, and how do you fight against yesterday when the Japanese yen and they're changing their dollars and that affects us? This war that's just, to those who have folks in the military, it's not an easy thing, who have folks out in the Middle East. But to us, it's that fly that just, you want it to go away because you're ready to have a great time. And it's that one fly that just keeps buzzing around, whether it's you or you see it, and it keeps trying to land on the food. So until this gets some sort of rectification, which I don't know how, it's not my cup of tea. I'm a home wealth advisor, not a military. I mean, I have my thoughts, but nobody wants to hear those. So we're at the mercy right now of seeing what is going on. And the rates want to break out. They want to. You could see them. They're trying. But, man, if a duck farts, it messes everything up. I mean, everything. And the rates are trying to overcome battling media and all these different sorts of elements out there that are keeping it from just leave us alone and let us do our thing. And yesterday, like I said yesterday, rates get affected by the yen in Japan and them, what they're doing with their monetary policies. And then it affects because, hey, do people... All right, do they start selling their bonds or not, or not buying bonds, which causes the price to go up, right? So there's so many different factors out there right now. But that's why you tune in, and that's why we're here, and that's why we will continue to make sure that we keep you up to date. But what's crazy is it's August, and outside of being unmercifully hot, I mean, it is just a torture. It's already, for those people who are buying, think about this. If you come to me, I've got folks that we're under contract. We're going to close in August. Their first payment's not going to be all the way till October 1st. How crazy is that? I mean, hey, by then we'll know if the Saints are on their way to the playoffs. Right? Start putting in perspective. By then, Halloween decorations are out. And that means we're pretty much going to start putting a bow on 2026. And that's why we're going to talk about today. Hey, your goals for 2026. Where do you stand? Are you wanting that perfect rate, the perfect time, the perfect house? Well, we'll discuss. Is that a winning strategy? We'll help you get a plan together so you don't throw that away. But again, Gumbo Nation, you rock. Mortgage Gumbo, Dad Cam. Cannot thank all of you enough. Continue to send those folks over. We'll continue to knock them out. Our average loan closings this month was 12 days. That's a shout out to my incredible team, Christy, Tracy, Patty, Regina, all the underwriters that I've got involved. Absolutely amazing. We get it done. Speed equals trust. And over the last 5+ years, we've averaged closing our loans, Gumbo Nation, in under 15 days. Just got to clear the close yesterday, 8 days. We started it last Thursday. But we're going to talk about where are those goals? Where are you at with your goals? And FHA loans. Rates are a little elevated. We're going to talk about why just not rates, but why FHA loans make sense. And then we're going to talk about the number one commandment. Thou shalt not quit the job. At least this last month, at minimum a handful of folks. And I'm going to explain why. So I'm going to explain the thought process and the understanding. So don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. The home away from the show, 504-207-7600 or mortgagegumbo.com. Welcome back. Get those feet stomping. Get that volume turned up. Glad you're with us here. August 1st. Man, I talked to some folks doing some loans up in Tennessee, and they were asking about the hurricanes, and they're looking at buying a second home coming here. And, you know, I was explaining to them, and Jeremy, you get this, right? Being from, you know, hurricanes is, you're not frowned upon for wishing bad on others. if that makes sense, right? Like,
yeah, you're right. It's like you don't want anyone to have to deal with a hurricane, period.
right.
But there is that little bit that's glad when it's not
Glad it went
one
there.
you don't have to deal with. And you hope that wherever it goes, it ends up not causing
Yeah.
too much heartache. I feel for anyone, I know the Pacific side of things has been booming.
Yeah.
And that's typical for what we're in, an El Nino year.
Yep.
I have not seen the impacts of that, and but they've been dealing with. I know some storms were Cat 5. I think they've weakened as they've gotten closer to land. But yeah, it's one of those weird things where, like, when you talk about it, you're just like, when you see one out there, you hope that they just all go to sea.
Yeah, and I think
all they do is stir up the fish.
And I think for us too, the reason we can look at that, no reason I brought this up is it's August, right? And this is the, you start getting to the end of this month is when, the peak, right? And
I want to say like August 15th.
Yeah.
The middle of August is, and to about September-ish is the meteorological, well, that's a hard word to say early in the morning, peak of the season.
Yeah. So, and look, if anybody, not that you don't have your own, but look, go to mortgagegumbo.com, click on resources. We've got our hurricane checklist and all that there for you. So, or shoot me an email, info@mortgagegumbo.com. I'll get you one. But the reason I bring that up is, these folks are moving. They're asking about that. And the other thing is we've been through it, right? So it's like when you've been through it, you're glad it's not coming here. But like you said, you're the pain of knowing what the rebuild is. And so they were asking about, because, they're moving here and they're like, we're looking, should we wait? And I'm like, listen, you can't time hurricanes, right? Like if y'all have got something and you're looking to get here, let's get you here. That's why we got insurance and kind of go from there, right? They're looking at it's a second home. So
the only reason I would tell somebody not to move right now is like you'll be dying of sweat.
Yeah, right. Exactly. Make sure you
I've moved in the summer.
Yeah.
I never want to do that again.
Yeah, make sure you get movers for sure.
Yeah, exactly.
Right?
And make sure your air conditioner is hooked up before you arrive.
Yeah, exactly. So,
I guess for them too, you said that for North Carolina, they were hit pretty hard not that long ago from
the coast.
I'm blanking on which storm it
exactly.
was. But,
Exactly. So it's all over there. But so look, it's that time of year and just got to deal with it, right? It's summer, and speaking of summer, hey, the G Unit and his boys, and that's why it brings me to what I want to talk about next. And I've got the 10 Commandments, which, again, go to mortgagegumbo.com, click on resources, the 10 Commandments when buying a home or doing a mortgage, whatever. Yeah, exactly. And number one is thou shalt not quit or change jobs. And the reason I bring Gavin up in the unit is, and we talk about this, I think it was last week or the week before when we get the unemployment numbers. And we're talking about how the lowest, from a filings and all that in 30 years. And folks, the gig economy is real. It is a real thing. And whether it's DoorDash, Uber, you're hustling like my son and his roommate Mason, they're out hustling, cleaning driveways, windows. And they're playing the cute college student thing right now, but, then you got, making videos and doing all these type of things is different than when many of you grew up or who are, 40 plus, how we did things. And the reason I bring this up is this week alone had 2, guarantee it's 5+ over the last month, of folks who left their job making more money, but need to understand if you left that W-2 job to go DoorDash, to go do landscaping, to go do whatever you're going to do, it resets everything. Now, if you're doing it while you're doing something else, fine. We don't have to count that income just yet. We use your current job. Then what happens after happens after. But the reason I bring this up is, again, we're seeing it. So many of you, credit's good. You've qualified. You've got money, all that. You've got down payment. But then you quit your job because this new gig economy, this new thing that you're doing, is making you more money than what your other job is, but we can't show it. So we've got to make sure that we're careful on that. I'm not telling you, hey, if an opportunity presents itself, it's just like I had to explain to a gentleman yesterday. Got his credit right, making money, working for a contractor, getting paid, big time bucks. So took a leave from his W-2 job to go do this. I ain't going to mention the job because, if they're listening, he ain't coming back because of what he's making. And he's like, well, man, how do people buy? I'm like, well, you got to wait 2 years. There's timing on everything. Or let me even stop that. You don't have to wait 2 years, but we've got to divide it out by that. So, if you make $100,000, if you've been self-employed for a year, you make $100,000, we divide it out by 2, of $50,000 a year, get you where you need to be, then let's rock. But many of you won't have the cash flow on a new job like this to where we can look at a bank statement loan or something like that. So that's why when we talk about what's your goals, and we're going to get into more of that, as the show goes on here, if your goal was to buy a house, we've got to make sure that we have a plan and understand what that is, because you can't put toothpaste back in the tube. And I get it. Look, I'm watching what my son's doing, hustling on the summers, doing the type of work that's out there. It's a lot of non-traditional stuff. At his age, you know what I was doing? I was coming home flipping burgers at Wendy's. Knocking down, and many of you will know, this will show my age, many of you know, I was knocking down $3.35 an hour. And that was as the when I became top fry guy, I went to $3.40 an hour. So I got to pump in an extra 20 hours to get $1 a week. So now there's different things. And in retrospect, what we're watching and people wanting things for nothing, those who are hustling, they're the ones that are out there making the money. But you got to just keep in mind when it comes to buying an asset like a home, we're going to have to show that something is sustainable, regardless of how much you're making. We've got to be able to show that. So I just wanted to make sure that we kept that because I'm seeing it quite a bit. Quite a bit. And one of them, if I'd have known, I wouldn't have did. And hey, listen, I get it. And that's where you, Gumbo Nation, come into play. That's where you, print those 10 commandments on mortgagegumbo.com. Get those out to folks so they understand. Or call me so we can have that discussion. Let's make sure that we've got a plan put together for you. All right, let's get into our weekly segment we like to call Ray Watch.
The mouse was hiding. Very rude.
Hey, look, I don't want to do it either, right? I don't blame it, It's not wanting me to be giving out some of these numbers here. But let's get into it anyway, because you know what? We don't hide from the data. We don't. But I can tell you, people are still buying homes. We're just making sure that we do it and get creative and figure it out what's the best way to go about it. So don't go anywhere because we're still going to talk about that. 30-year, 6.83. That's up from 6.81 last week, which is 20 basis higher than 2 weeks ago. 15-year, 6.32. It's down a tick. FHA, 6.34. It's down a little bit. VA, 6.36. It's down a little bit. And then you got Jumbo at 6.92. 10-year, 4.651. So that came back. That's what I'm saying. Rates are trying. They're trying to fight for you. They're trying. And that's why for so many of you who your goal was to buy a house and you want that perfect rate, that perfect down payment, that perfect house, that perfect time, that is not a plan. That is just not how it works when buying a home, much less in life. How many of us out there with a child went, oh, yeah, okay, we're ready now. We have the perfect amount of savings. We have the extra room in the house. We're living in the house that we want to raise our kid in for the next 18, 20 years. Right? I can remember being at, oh, God, do we have enough money? Do we this and that? Gumbo Nation, we cannot. And I want to make sure this is clear. And this is why you trust me. And that's why I repeat it time and time again. What you can afford and what you're willing to pay, I understand, is two different things. But keep this in mind as well. I can't give you something you can't afford. I can't. I can't put you in a $400,000 house if you can't afford it. In so many conversations, once we get into this, folks realize they can afford a lot more because there's so many things that you read online or you hear and you're wondering. And maybe it doesn't affect what your buying power is. Or maybe there's things we can use that help your buying power. So while the rates aren't where we want them to be, at the end of the day, it's a number on a piece of paper. So we're going to figure out how to work around that. And that's why coming up, we're going to talk about FHA loans. On the other side of the break, your goal was to buy a home. You got 5 months left. We're going to go over and see. I'm going to give you some percentages of what's keeping people on the sideline and what's holding them back. Do you fall into this area? And then why an FHA loan makes sense in today's market. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-207-7600 or mortgagegumbo.com. Welcome back. Mortgage Gumbo with Dwayne Stein, mortgagegumbo.com. Home away from the show. Info at mortgagegumbo.com. All right. So it's August 1st. Your goal in the beginning of 2026, you heard my show, you messaged me, I'm going to buy a house this year. So what are some of those things that are holding you back? Are you in the 48% who say high home prices? Or are you in the 33% that say higher mortgage rates? 33% down affording a down payment. 30% not enough income. 29% economic uncertainty. 21% lack of inventory. 20% poor credit score. And it keeps going down. 18% too much existing debt. Job security concerns. All right, that would be my number one. And then 13% personal reasons. So let's look at that. What are some of those things? And is it high home prices? Well, my question to you is, have you gotten approved? Do you know what you can afford? Do you know what your affordability is? Because if you're just looking, going, oh, well, prices are high. Well, compared to what? If anything, that's showing you the value of home ownership. So do you know what you can afford? Well, I don't have 20%. This is one of the biggest myths when it comes to home ownership. So we're going to talk about FHA loans in a second. So saying you don't have down payment. We've got down payment assistance programs. If you're a veteran, we've got zero. You may qualify for a rural development loan, a USDA loan, zero. We're helping our buyers every single contract get seller concessions where it needs to be to help out. And a lot of you have more money than you think when we sit down. But you're like, well, if I don't have 20%, and this is where Gumbo Nation, moms, dads, grandmas, grandpas, this is where you got to make sure you're not hurting that younger generation, making them think, oh, you got to have 20% because you want to avoid PMI. PMI is a tool to home ownership. It's not an obstacle. PMI is going to allow it. And quite frankly, it's very cheap. When you start looking at compared to trying to find another 10% to put down or 15%. But a lot of you, well, I'm unsure. I get it. Look, I get it if you're nervous about things and the economy, stuff like that. That I understand. But are you credit worthy? Have you tried to get pre-approved? Do you know what you're buying? Hey, look, maybe your buying power does suck. Or it's not where you want it to be. But let's find out for you. Because every month I'm closing loans for clients who call, thanks to you, Gumbo Nation, sitting around a water cooler, or aunt, uncle, brother, and sisters going, just call this guy and find out, and they're pleasantly surprised. And every month we're sitting at the closing table, and they're like, I can't believe this. This is amazing. So if it's the credit, let's look at it. Let's challenge it. Let's figure it out. Let's not try and avoid something. Many of you, I just don't know where to start. And I get it. There's a plethora of information out there, whether it's TikToks and Instagrams and all these, X and all this stuff. But you got to find yourself a reliable resource that you can trust, who understands that they work for you, and their goal is making sure that they understand what you want. But when we're looking at it, I don't want another year to go by for you. And I get it. Hey, if job, something like that happened to keep you where, hey, it threw you off course, I get it. But we're now in August. And maybe it's time to do that mirror check. Maybe it's time to look in the mirror and go, have I done what I need to? If my goal is to buy a home this year, have I done what I need to? Or what do I need to do? Look, my website's got so much information out there. You can go follow me on YouTube at Mortgage Gumbo. Over 800 plus videos of explaining first-time home buyers how to win, what to do. But I don't want every day, hey, I'll get to it next week. I'll get to it next week. I'll get to it next week. Let's just have that conversation. Because maybe today your buying power is 225, but the area you want to be in, you need to be at 300. Okay, well, let's see what we can do. Let's get a plan together. So we can make sure that time just doesn't keep going by. Let's put a plan together. Let's get that credit in line. Let's get that pre-approval ready to go. But waiting for the perfect rate, the perfect time, the perfect house, that's just not a winning formula. And I'll continue to say it. When you are looking for that, I'm going to wait for the lowest rate. Gumbo Nation, that is the wrong strategy and could sometimes be more expensive. I have to help people every single day understand and keep them, all right, hey, I'm not going to put down that other 10%, but how do I use half of that money to buy my rate down and do this, or discount points? And I got to stop them from chasing a number on a piece of paper and figuring out what is the big plan. And as your lender, is your loan officer working for you? Are they having those conversations with you to understand what your goals are so they can make sure that what you do today is setting you up for the future? All right, don't go anywhere. On the other side of the break, why in today's market an FHA loan makes sense. Don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio, 504-260-0995. Welcome back. Again, can't say it enough. Thank you, Gumbo Nation. Thank you, moms, dads, aunts, uncles, coworkers, colleagues. Keep going out there, spreading that word. Want to thank you again for another solid month of July. Purchases, refinances, construction, reverse mortgages, you name it, we've got it. So let's chat a little bit about, I did get a question. You know what? Let's get this question here. My wife and I are looking to retire in the next 5 years. Our home by then should be paid off. We'd like to keep it. Our goal is to buy another property in Alabama or Florida. Can you explain the difference between an investment property and a second home? Sure, absolutely. Great question. So a second home, we can classify a second home if it is more than 50 miles from your primary residence. So if you live in the New Orleans metro area, Orange Beach is more than 50 miles. Or Florida, it's more than 50 miles. So that can be considered a second home. If it's less than, like if you're going to buy something that you're going to renovate and you want to get rent for it, that's an investment property. Or if you're going to rent that property out, that's an investment property. And it's over 50 miles. Now, the benefit of a second home is you could put down less money. Not sure if that's the reason there, but you could put down less money on your down payment on a second home. Compared to an investment property that it's going to be a minimum of 20% down. And that doesn't mean, if it's a second home, hey, if I rent it out a little bit here or there, look, that's between you and your accountant, right? I mean, but a second home is something where, hey, when I'm not at home, right? A lot of people want to have that other property to look at. Now, hey, if you're retired, maybe you make your home here your second home, and that becomes your primary. So it's much better interest rates, different things like that. So, hey, let's have a conversation. That's what I'm talking about. We're looking at doing something within the next 5 years. Let's have a conversation. Guess what? Prices on the beach aren't going down. They're going up. You may be in a position now where we could take advantage of that today. All right. Folks, it's follow the money, right? At the end of the day in the housing market, you got to kind of look at everything and go, all right, what makes sense? And how many of you are thinking about buying a home, but the thought of this gigantic or massive payment, or that you have non-perfect credit scores, it's keeping you on the sideline? It's okay. You can raise your hand. You're in your car, or you're in the comfort of your home, or you got your earbuds in. Well, today what I wanted to kind of do for you is what I think is one of the most accessible paths for you to home ownership, and that's an FHA loan. And, it's not just for first-time home buyers. It could be for buyers looking to re-enter the market. And I've been using it over the last couple years as almost like a secret weapon. Look, back in the day, the FHA loan was the loan of almost like last resort. It was the loan when people didn't qualify. All right, let's go see if they can get an FHA loan. Now, we're using it strategically. And the key benefits here with the FHA loan is, number one, it is less out of pocket when it comes to a down payment. It's as little as 3.5% down. So that right there put you in the game. And this is what I was talking about previously. How many of you are going, hey, I can't afford, don't have enough down payment? Well, an FHA loan automatically elevates you into a whole new affordability, a whole new home buying market, a whole new neighborhood. Because we're going to significantly reduce your upfront cash flow that's required, or that barrier, so to speak. The next thing I would tell you is it's credit scores, very forgiving. At Mortgage Gumbo, we can do manual credits. We can do manual underwrites when it comes to FHA. But we do stuff 580 or even below. Now, somebody at a 580 or below, maybe you got to come up with a little bit more than 3.5%, but we have those options. So there's a little bit of forgiveness when it comes to the credit scores. A little bit more lenient. The next thing I would tell you is it's flexibility when it comes to your debt-to-income ratio. Now, again, we can't give you what you can afford, what you're willing to pay are two different things. But when it comes to FHA, it allows for a little bit more debt. It allows for a little bit more home, your DTI, your debt-to-income ratio. It allows that to be a little bit higher. Now, it's the old adage, right? We don't want to make you house poor, correct? We don't want your house poor. We don't want you to own a home and your biggest decision is beef or chicken ramen noodles. But it allows some flexibility there to get you in that house. The other thing is gift funds. Bank of mom and dad could come through. The interest rates, we told you, they're lower. They're almost 0.5% lower than conventional right now. So very competitive. In seller concessions, this is winning. Seller concessions is up to 6% on an FHA loan. So on a $300,000 loan, you could get up to $18,000. Not saying you need that much. But maybe we buy the rate down. We discount the rate. It pays for that first year of, the seller can pay for that first year of insurance, taxes for you, which then what? Allows you to hold on to your cash, which makes you feel more whole, which makes you feel more comfortable. Now, a lot of people call and go, hey, can we do an FHA loan on like an event? No, it's on a principal residence. It's got to be your primary residence, owner occupied.
2 minutes.
But what I want folks to understand when you're looking at it, when it comes to the FHA and why we're looking at doing this right now is those seller concessions, number one. 90% of my FHA loans come in with right at the down payment. Maybe a little bit more because the seller's taking care of everything else. When we go to refinance, when that day comes and those rates do fall, we could do a streamline for you. We're not re-verifying, necessarily having to re-verify income. No appraisal. It's called a streamline, so it works out in a great way. And then, of course, FHA, they like to tell you assumable. Nobody's going to be assuming your 6-something rate. But maybe you're sitting on an FHA loan right now and you're looking to move. And
1 minute.
You've got 3.5%. So the takeaway here, Gumbo Nation, is let's have that conversation. If that goal this year was to purchase a house, let's see if we could still make that happen. But don't assume that you are priced out of the market. This is where you come to a professional like me. This is my job to work for you to find out what options are there. But an FHA loan will help you understand and get you from stopping to paying rents and start building that home equity much sooner than you think. Stay warm out there. Your homework this week, just tell one person. All you got to do is go up to them and say mortgagegumbo.com. They'll figure it out from there. Till next week, Gumbo Nation, keep stirring the pot.